All right, so welcome into the live show. Today we are going to jump into some very interesting topics around the S&P 500, some of the impacts that the traditional stock markets could be having on crypto. My name is Paul Barron. Welcome back to TechPath. As you guys know, we jump into these kind of topics, and occasionally we'll do these, well, actually not occasionally anymore. We're doing live a lot more now, so best way for you to interact with us is through the chat right here. I'll try to get to your questions the best I can. And occasionally we will have interviews that are going to be coming on. We're hoping to have Gareth Soloway on to talk a little bit more around the markets and its impact on how this will work. Before we do get started, I want to talk a little bit about some of our sponsors, and that is, of course, iTrust Capital, one of our big sponsors here. We love this team, and really kind of if you're looking at anything in the area of crypto IRA platforms, we've done a ton of research on this in really kind of understanding where were the best platforms out there, and iTrust Capital has come back really as one that we've been really interested in. And we've had them on the show. They go into a lot of deep dive on really how for you to set one up. Very simple setup though, complete your IRA application online in minutes. You'll get started by a step-by-step walkthrough, very simple. 3 ways to fund it. You can fund it, of course, with fiat, with another IRA, and of course with crypto. Easy. 24/7 trading, so you can actually be active on your own dashboard, doing your own trading as well, which is kind of fun for me, at least if you've done. I set mine up. I was really impressed with, one, the interface, and also how easy it was, but I really like the aspect of being able to trade within the account, which is another one. The big thing, though, that I think a lot of people don't really understand when you look at crypto IRAs is the aspect of security. And this is going to be the case on anything you guys are doing out there if you are starting to maybe get into securing your coins in other ways other than leaving them on exchanges. Very similar in terms of secured storage. They're doing some integration with Coinbase custody for digital asset security, and they're also doing crypto assets with secured with Curve, which is iTrust clients where they receive institutional custody, which I love in that approach. The other thing that I like about iTrust and that they've been really cool about is that they go into providing a lot of deep dive research, editorial, and just in general coverage about what's happening in the space. And if you go to their website, you just hit this press section right here at the top, and you will find a little bit more about what's happening there. Okay, so we do have some chats coming in today. Let's jump to the market real quick. Look at Live Coin Watch, take a look at where the market is flowing. And we did, of course, after yesterday, see some pretty heavy discounts across both altcoins and, of course, some of the major blue chips, and of course that being Bitcoin and Ethereum. Bitcoin and Ethereum holding very strong right now, at least after what we've seen in terms of the adjustment. I think a lot of people will be looking at this. Is this an opportunity to buy? Is there an opportunity here for you to maybe hodl through? Or is this a scenario where maybe you should be looking at taking some profits if you've purchased in way down on the line, and maybe you're looking at trying to adjust your portfolio? Not necessarily something I would do. We'll do market movers where we'll pull together all kinds of projects in terms of research, analysis, all that good stuff. But remember, this is not investment advice. We want you guys to go out, find your research, kind of cover, hopefully we've led you in the right direction. And the idea is that once you get to it, hopefully you're out there making some good decisions on your own and kind of get going. The other thing that I wanted to look at, if you haven't checked out our video, we did a video here recently to really dive into some of the projects to watch in the altcoin space. And of course, some of the key ones there were the usual suspects. Solana, of course, has been in a really interesting space. I want to kind of jump to the Solana chart real quick, just to kind of give you guys a little bit of an understanding of where Solana has been. Market cap still holding pretty strong. Volume is down quite a bit in terms of where they've been, and it's trading a little bit lower after it seemed to have a little bit of a rebound yesterday and then kind of adjusted. Let me jump to the 24, and you can kind of see where this was repositioning right around here, has tailed off again, and we've started to see another little spike up. So I anticipate that we're going to continue to see a lot of these kinds of movements from these really stellar altcoin projects, and it is something that we've looked at. And I think the scenario that we're, at least for me, again, not giving you financial advice, but what I would be doing and what we are doing is really getting out of the low cap altcoins and moving into these blue chips like a Solana. Obviously, if you're into Avalanche, Algorand, we're a big proponent of. We do still like and love DOT, even though DOT took a little bit of a hit. But those are some of the projects, and then of course, not forget, of course, Cardano, which is another one because of the purchase price or the point of entry that you could make on Cardano. There's some great opportunities there, I think, in terms of reallocation, and that is going to be the big one to really watch. I want to jump into the S&P 500 because this is the scenario that a lot of people are trying to correlate to what's happening in the cryptocurrency market. And the big thing that you've got to kind of understand, and this has really been the situation pretty much for the entire crypto market, at least in the last modern market, meaning the last 2 to 3 years, where we've seen, and since 2017, where we've seen asset classes that have a certain level of impact on what's happening in the crypto space. And I think that is the key question that you want to answer today is, how will the S&P hold, number one, and will the S&P have some sort of contagion effect based on some of the things that have been happening with Evergrande? And if this is new to you, we're going to dive into that. I want to jump over to this first story. S&P 500 suffers its worst day since May as Wall Street starts its slide. And finally, Wall Street, of course, they've racked up some of the worst days since of 2021, with the S&P recording its biggest fall. Despite a late rebound, it did show a little bit of life from its lows on a rough day in the New York Stock Exchange. Worries that China and the indebted group of Evergrande, some people Grand or Grande, could default on a debt payment later this week when it, of course, hit the stock market and where that's going, as did the anxiety over ongoing pandemic. There's just so much that's kind of boiling into this. And we just did a segment, which, by the way, we're going to drop 3 videos today to you that are really diving into some big scenarios. One is 3 things that can help the Bitcoin recover and also the crypto markets recover and what those might be. We're also going to be dropping some news about CoinDesk and how that might affect you, and then also some cool stuff on NFTs. So make sure and stay tuned here for that kind of material. I want to jump back to this story. Tech-focused NASDAQ had more bruising day, down 2.2 or 330 points. That was closing at 14,714. That's the lowest level in a month, with major tech names such as Microsoft, Alphabet, Amazon, Apple, Facebook, and Tesla, all of them, of course, which were falling. So this was something that had that approach. When you have a major, really a major player like China and its effect on, remember, so much investment in Chinese capital here in the United States, and that includes real estate, a lot of companies that the Chinese invest in here, and then of course you have a certain number of Chinese stocks that continue to perform here, especially in the EV space. And then you have just in general the number of tech companies that are involved in this. So the ability for it to really affect what's happening in the S&P is real. That's the number one thing. The question I have and have looked at over time is that with the S&P, almost immediately we've seen effects on crypto, almost immediately. And I would say yesterday, because of what we saw in that little bit of a shock, it did have an effect. The question is that I think a lot of analysts were looking for a much lower resistance push on Bitcoin due to this. And in many cases, people were anticipating maybe a 40K Bitcoin price. We were kind of pushing against that, mainly when we look at some of the things. One, of course, is sentiment and amplification, rescoring. We've got a data set. We're not going to present it today, but we've got a data set that we're working on right now that scored yesterday's fall. And that will help us. Hopefully by tomorrow, we'll have another live stream coming up later this week that we're going to be able to drop that information in and give us an outlook going toward the weekend of whether or not that's going to have a longer lasting effect on a recovery for Bitcoin and what that might be. So that is something that I think, as we see more and more indicators coming in to really affect what's happening on Bitcoin, the question is are they going to stick? The S&P movement, unless we see a big movement, meaning plus 5% in a negative position, a lot of this is really somewhat speculative in the sense that will it have a really big rollover effect to Bitcoin? My belief is that I think crypto has made the separation, not entirely, but based on what we're seeing, I think crypto has made the separation from the asset class, being stocks, and that the impact of the stock market and some of the global scenarios are having less and less effect, because what's happening is people are starting to migrate fiat dollars into crypto. And that is the safe haven that Michael Saylor talks about, that many of the crypto maxis are really kind of talking about, is that the safe haven is starting to occur. And that means a lot of US dollars and also global currency in general are starting to move in this direction. So really, what caused all of this? What was the flash crash initiative? If you haven't seen, we've talked a little bit about it here on the channel, and there's been, just a plethora of YouTube channels out there really covering it. But I think what people maybe have not been looking at is the underlying, I'll call it subversive situation in China. And what I mean by that is the situation in China is such that the CCP has really put a lot of pressure on some of the key companies in China. Now, let's not forget, here recently, we've seen China put pressures on electric car companies. We've seen China put pressure on companies like Alibaba and Jack Ma. We've seen, of course, the CCP start to move toward pretty big names in terms of the billionaire class in China. And it's really no different with Evergrande. So let me kind of just jump to this. Evergrande's crisis triggers this short-term stock market sell signal. And of course, this was built off of, and this was kind of interesting right here, a sharp turn on broader stock market sentiment is seen by S&P 500 dropping below its 50-day moving average, which was a big, the big point. But the news was that Evergrande, which is a massive, real estate investment group, this company essentially was in and is in a debt crisis that is going to really position this. And if you think about kind of the economy within China and what it involves in, much like what we dealt with in 2008, where we saw, the home prices started to crash, the savings and loan situation really got upside down. And then, of course, we dealt with a recovery based on the US government bailing out the banks, the institutions, because of the position they had put themselves in these bad loans. A little bit different here. This is a major real estate company that could have, it'd be like almost like a BlackRock or someone like that, or even a Greystone, someone like that being able to basically be knee cut, and out of the market. So what kind of potential effect does that have on the Chinese economy? What kind of effect does that have on the Chinese population? Because that starts to roll into some of the other aspects, and that's everything from building materials, real estate sales, car purchases. Remember, China is still is the biggest GDP in terms of market size, and they do rival the United States in terms of overall ripple effect on how it approaches the rest of the world. And we've done some videos on Belt and Road, China's initiative, that has really kind of connected what's happening with the digital yuan in China, and also how that potentially has so much effect on the rest of the world in terms of potential world reserve currencies. That's a big status in the scenario. So the short answer to, does this affect crypto in the short term? Sure, we're going to see these kinds of small instability moves in crypto moving from, I think, over the next 10 days. But I do feel like what we've seen already with sentiment and also rebound data that we're seeing in the marketplace that has started to point back to the scenario of maybe this is not a long-term effect. Now, granted, it's not going to be a long-term effect on the stock market, but it is one of those things that I think a lot of people have been looking for, these corrections, which could we see something like this that starts a domino effect on the stock market itself? That's going to be a big question to answer. I want to get into one of the charts that we look at, and just to explain for you guys, because sometimes I think a lot of times the questions that come in when we do our chart analysis, which, by the way, we just started doing some stuff with one of our research analysts, Evan Aldo, who's doing some basically some market cipher charting, giving you guys a little bit different look and feel. But we use a proprietary index that we've built over the last decade. And the idea is that it's based off of sentiment. It's basically measuring a whole array of indicators that are coming from basic application interfaces that we use from these platforms. And what that does is it gives us a sentiment score across a variety of social media indexes, and it gives us an amplification score, and we can score that against active movement within the chart. So what we're looking at here is the Bitcoin chart. And I want to just kind of show you what we've been painting over the past few weeks. And these are different sentiment scores. So I'm kind of really zooming out right here. But looking at a sentiment bubble that we had pulled back in mid-August, sentiment score was at 63.19, amplification 61.44. Amplification is the way that we can record the quality of sentiment that's being talked about or used within social media on a particular project like Bitcoin or Ethereum, et cetera. Anytime we see something like a 61 or anything above, solidly above 50, that's a great amplification score. Anytime that we start to see amplification performing as good or better than sentiment, we're in for some fireworks action. So this, of course, was performing pretty tight to where sentiment was, and we started to see this move right here. We also saw an excellent move right here. Again, sentiment scoring at 74.51, amplification was at 73, and this bubble was pulled in August 23rd. We ran that one out to the 25th of August, gave us a little bit of sideways action, but also gave us that little bit of that high, which was this 52K high that we had finally got back up to before we saw this little bit of fall off, and then the sideways before the market correction that's pulled in there. So that is something that we've continued to see with Bitcoin, and I think this is going to be something that we're going to watch very closely. What you're seeing right here in these purple, almost Bollinger Band approaches is our overlays of sentiment and also amplification. Amplification is when we start looking forward, and when we look forward, it starts to help us graft out what the future is. So you can kind of see once that the amplification layer started seeing the fall off, it shows a little bit of a dip below that 42, that 42.2 line, and the amplification sees it coming out of this, and it's trying to do it with the exception of that spot right there, which is something that we're going to be watching. But I'm going to pull on one of our analysts that has been on the show before and kind of give you guys, hopefully I think we can pull him on. We'll see if we can get him in here. Hang on one second, guys. We're going to try to pull him in. Looks like there's Gareth right there. Hey, Gareth, how are you, man?
Hey, I'm doing really well. How are you?
Excellent, excellent. We got you in on a live stream today, so thanks for stopping in. Looks like you have been busy in the charts back there.
Yeah, absolutely. It has been some wild action the last 24 hours or so.
I love it. Gareth, we've jumped through kind of the analysis of the S&P and its potential effect on Bitcoin. My position is that it's maybe not as dire as some people are looking at it. Of course, yesterday we saw a lot of people that were really kind of frantic. And I think we did see a little bit of a correction there at the end of the day. What did you see yesterday when you started to see the correction start to occur with kind of this roll-off of what's happening in China?
Yeah, so there's no doubt that there's a little bit of a deleveraging issue here where people are taking risk off, and that's universal in all markets. So, you had the stock market that basically was at all-time highs, so it made sense that the stock market potentially could get hit a little bit more than Bitcoin, because Bitcoin's already off the $65,000 high, all the way down in the mid-40s at this point. So I think that's exactly right. I think the deleveraging will impact Bitcoin to a certain extent, but a lot of the leverage now is in the stock market, and I think that's why you saw the really kind of the panic sell yesterday.
Okay, so the panic sell, short-lived though, it seemed to have a little bit of a recovery right there towards the end of the day. Opening today, I saw a little bit of life in the market. What are your anticipations, or at least your projections, when you look at some of the projects that you're looking at, at least from the S&P side? Do you feel like we're going to see that recovery, and what kind of impact do you think that's going to have on Bitcoin?
Yeah, so for me, I'm looking at a market that definitely is tired, right? So we saw a little bit of a corrective move with the contagion fears from China yesterday, and then today the markets are going into kind of this hope mode where they are hoping that the Federal Reserve tomorrow comes out and delays any tapering because of this contagion fear, which they very well may do, right? I mean, one of the things I keep saying is that recently we've heard about these Fed officials who apparently have been investing in stocks for the last who knows how long, and
Right.
finally they're saying, okay, well, we're not going to do that anymore because we don't want to look shady, essentially. And it's you can't help but wonder if this was the market top just as they said, hey, we're selling our stocks. That looks really bad. So I think the Fed would love a way to kind of make the markets go back up, and delaying tapering would at least give them that possibility of driving the markets back up. I don't know if it will work because I think there's a lot of issues. I mean, you have tax hikes, the potential on tax hikes. You have obviously the tapering issue. You have a lot of these other things out of China and the potential for debt contagion. So I think there's a lot of risks in the market right now, but I think the Fed would love nothing more than to delay that tapering in tomorrow's statement.
Okay, so that's a good point because I think that has a little bit of a run-up potential. If we saw the Fed come back in and say, "Hey, we might advance tapering a little earlier," that's obviously going to maybe have an impact on, because that's more economic entirety kind of scenario that we're talking about. We've talked to a couple of analysts here on the show that seem to point toward end of 22, maybe even 23, before we see the Fed actually doing some sort of tapering correction. What are your insights on that?
Wow, I mean that would be quite something. It wouldn't shock me though, because again, you have a Federal Reserve that leaves the punch bowl at the table for way too long every time, right? So you had this 120 billion that was put into effect when we were at the crisis lows of March of
Right.
2020, and it was for emergencies, right? And here we are a year and change later, almost a year and a half later, and they haven't even started to remove that money yet or taper it. So the Fed tends to leave it on the table because they're playing the safe game. The problem is there's always another crisis, right? I mean, if it's not COVID, it's contagion in the debt markets. If it's not that, it could be the economics are slowing down. And then
Right.
the Fed the result is, right, what do? They go out and say, okay, well, now we got to print more money and push more
Mm.
money in. And it's all interconnected, right? Because if the Fed continues to pump money in, it allows this debt bubble, which is now becoming an issue with China, to just inflate and inflate because there's so much liquidity in the system, and it really has to go somewhere, right? So it goes into assets like stocks and even like Bitcoin.
So, Gareth, on when you look at the Bitcoin chart itself, we saw a little bit of a bump off the floor. What I feel like seems a little bit of a correction. What are your thoughts on where are your charts, I should say, showing you in terms of the potential correction for Bitcoin? I
Sure.
don't know
And
if
let me
you can
show my
share a
charts
chart.
here.
Yeah, let's
Yeah,
do that.
absolutely. Let's take a look at this. So basically, what you have here, and this is a fascinating chart on Bitcoin, and I hope you guys can see it. But
Yeah, we're going to go
basically,
to
we
your one.
have.
Yep.
Okay, there we go. Perfect. And you can see how we had this head and shoulders pattern, which broke down. That took us to the $30,000 low, which was the completion
Right.
of the head and shoulders. And then we chopped for a long period of time. And then bulls started to get bullish again. And we started to see the inching up. And then look at where we went. I think the last time I was on, I
Hmm.
might have even talked about us going back to what we call the scene of the crime, which is the trend line break. So here was where it broke to the downside, and then inevitably most charts retrace to that same amount. And notice how as soon as it got there, that was that 2 week ago collapse in Bitcoin where it fell all the way to the low 40,000 from kind of like 52 to 53,000. And then basically since then we've created a bearish pattern, and then we're starting to dip again. The one thing I would say is we did hit support in the overnight. So you can see, well, that line is not accurate there. Let me get it on a little bit better. But basically you can see pivot high, and pivot high right here.
Right.
And that's the low of the overnight. So we are at support right around 40 to 41,000. But everything I'm seeing is you might have a little sideways action here, but inevitably I am seeing further downside on Bitcoin over the next month or two.
So interesting point there with downside on that. We haven't pulled, so we look at sentiment data to try to get a leading indicator on where Bitcoin is going. We haven't pulled the sentiment on the flash crash yesterday. We've got it in process because our stuff isn't real time like this, but because we're looking out at forecasting. If that, because sentiment has been holding pretty high on Bitcoin, like at 71 amplification, our amplification score 71, and we've been tracking almost with the flow of Bitcoin. Once we drop that other sentiment bubble, that purple line will start to move. You're saying potential downside. How far on the downside do you think this might take crypto? in terms of Bitcoin?
It's very, very on a technical basis, super important to hold basically the lows of the overnight, which was around the 40 to 41,000 level. That again was the breakout level where it took us to the 52 to 53,000 level. So if we can hold that, then Bitcoin has a shot of kind of climbing back. But if you break the 40 to 41,000 level, you start going back into that general channel where we were trading after the initial big breakdown to 30,000, which was between
Hmm.
30 and 40,000. So once you're below that level of 40 to 41, you actually could trade as low as 30,000. I
Wow.
don't think it'll be super fast, but I do think investors have to be aware of that. Now, again,
Yeah.
please understand, long term, I love Bitcoin. I mean, Bitcoin cryptocurrencies are the future of our economy and of the fiat currencies and all the printing. It's the solution to that. But to me, the big concern is that there's still so much of an unwind out there, not only in the stock market but in other assets. And my fear is that when someone gets a margin call in their stock account where they've over leveraged, they don't necessarily like to get out of those losing positions. So what do? They go over to a different account and sell potentially some cryptocurrency, which then creates selling. And that's why everything is so intertwined in the system these days, is because as you get margin calls and you're leveraged, you just take it from wherever, and inevitably it could have an impact on the cryptocurrency. So again, I'm a technical trader, so I'm watching 40 to 41,000, but if that does break, then you have downside potentially to 30.
Yeah, so we've seen here on the channel, in terms of some of the research we've done, in terms of some stock traders that have been in stocks for quite a while. And some of those indicators are pointing that people are moving out of the stock market and going to cryptocurrency as a safe haven. Are you seeing that across any of the accounts or projects that you guys are working with?
I think there's a little bit of it. I think every single day that we advance in our society, you're getting people to kind of accept cryptocurrencies a little bit more. So I think every day there's going to be someone or multiples that say, okay, I want to diversify a little bit away from stocks, especially as we start hearing about the debt contagions and the potential for the Fed to de-risk. The big question I have is, what do we see with the tax hikes? And I think that's another wild
Right.
card, right? Because you have regulation with cryptocurrency with potential of taxes as well, but also in the stock market with long-term capital gains. And again, the question is, do individuals that have long-term capital gains, if those taxes go up, do they sell some of their crypto positions to then fund those taxes versus selling some of their other winners and so forth? So I think there's just a lot going on here into year end that create quite the gray area on where the market could go. And it kind of becomes a higher risk situation where, there are going to be a certain amount of investors that say, hey, listen, I'm going to sit on the sidelines until we get more clarity on tapering, on taxes, on the contagion of debt and all these
Yeah.
things.
Yeah, I think for us, at least on our research, is we still are looking at that hold line. So we feel like Bitcoin is potentially going to bounce from there. The key will be a couple of scenarios. We can't have, additional fuel on the fire if we see any kind of, Fed scenario coming in. If we start to see, less and less positive news from China, especially around the Evergrande situation. But let's paint a scenario. If China says, hey, we're going to go in and bail this situation out with Evergrande, and that occurs, the markets feel rebolstered. Maybe there's an upside to it in the S&P 500. Where do you feel like that is going to, and could it affect crypto?
Yeah, it definitely could affect crypto. I think anything that kind of alleviates this initial stress that caused the drop over the last couple days would then give a rebound bounce to it. And I think you'd see it in the equity markets as well.
Right.
Specifically, I've been accumulating some of the Chinese stocks that have been beaten down. Maybe I'll look back and say that was the worst decision ever. But I am in the camp that China will come out, and I don't think they're going to bail out Evergrande because I think they want to set an example. But at the same time, they're not going to let it get to the point where it affects the economy in China and potentially the world economy, right? I mean, they still are a big exporter of goods. They don't want to hurt global economies and then hurt their own economy in the process. So I think they're going to set an example and be stringent and hard on Evergrande, but at the same time make sure that the underpinnings underneath what's going on don't kind of spread. And I think that'll be a very positive thing for China stocks. Cryptocurrencies probably do get a bid there as well on it. And again, the question is, how long can crypto hold up, and can it move back off this 40 to 41,000 level and climb
Right.
back to really that 50 to 55 level is going to be very important.
Gareth, I've seen some of your video analysis on Bitcoin based on the cycles. In looking back at 2017 and all the way back to 2013, anything that's looking familiar to you now on these?
Yeah, so and this is part of where my slightly bearish angle comes from. Not only the retrace to the scene of the crime, but let me show my charts again here so we can kind of
Yep.
get everyone on the same page. And I think this is a really important thing is that so number one is the last so you've had two major cycles in the last 10 years where Bitcoin went up precipitously, much like we saw the run up to 65,000. The first time was in 2000 and check that. That's 2013 right here. So you basically had Bitcoin at $100 in
Yep.
2013. It runs up to 1,250 approximately. It then collapses to 500, rebounds to 1,100, and then goes back to 100. Right. So again, the reason why I want to bring this to your attention is because if you look at the recent cycle of Bitcoin, it went up to 65,000, which was this run. It then
Mm.
corrected to 30,000, which was this run. It then went back to 53,000, which is here. And if this continues to form and continues to play out, then you do have another pretty sharp leg to the downside. And again, now if we go to the 2017 highs, you had the major run up to 20,000, the correction to 11,000, the big bounce back to 17, and then again, a bigger wave to the downside that took us to 5,000. I think we even got as low as 3,000 at one point in that cycle. So I'm kind of in that camp of saying, okay, well, we haven't been proven that this is different yet. I mean, there's so many people out there that say it's different,
Yeah.
that say, oh, this time's different because there's more adoption, there's more people involved. But again, there's too many similarities. Like one of the things that I draw to people's attention is that from 2013 high to 2017 high, how many years? That's 4 years. From 2017, add 4 years, you get 2021, which is right where we are, which is when we topped out around the 65,000 level. So there's just so many similarities that have to do with this cycle that it does put me on edge where I'm kind of saying to myself, okay, let this market prove me wrong that this is not like past cycles before I assume it is. And that's what a technical trader does, right? Is that you kind of
Yeah.
make the markets prove to you it's different before you say it is. I mean, our guts all want to say it's different. We all want to use our emotion and say, oh, we love Bitcoin. But again, it's got to be proven first. And I think that's the big kicker.
Yeah, and I think yes, and we are one of those. I think in terms of our analysis on cryptocurrency in general, just because of the number of projects that we look at and the insights into the projects that we get, we're starting to see some very interesting movement here versus what we saw in 2017. Ecosystem completely different. It's changing the dynamic of how the infrastructure of an investor works these days, as opposed to back in that time you were pretty much investing in Bitcoin and maybe a handful of other altcoins. So that in itself is a new evolution in the market space itself. Besides all of the other, factors, I just look at the sheer ecosystem. It's kind of like if you looked at the internet scenario that we faced in 1996, there was a handful of companies that had kind of evolved. But by 1999, 2000, the dot bomb occurred because of the sheer numbers that we're pushing against the market space. And I think that's the concern, if I were to have one, would be just the sheer load of blockchain projects that are moving.
Yep.
Now, granted,
You're sorry, I was just going to say you're 100% right. That's one of my concerns as well, is that
yeah,
it's so reminiscent of the dot coms. And I traded, that was my early trading career. And I just remember, I mean, out of the top hundreds, I mean, there were thousands at that point, but there was a handful that survived and they thrived like Amazon. So
exactly.
that's one of the reasons why I think a Bitcoin or an Ether will survive and thrive. But I do think that you might have to go through that washout period, like you're saying.
Let's talk about Ethereum for a second. Do you have a chart on Ethereum that you could show us in terms of where you see some of the resistance and where
Yeah,
that position might
absolutely.
hold?
Yep. So
Let's jump
so
over to that
basically what we
chart.
have here on Ether, right? So this is the chart of Ether, and one of the things I was a little surprised at is when we were running up, I was pretty sure we'd get to double top, and we didn't quite get there, and
Hmm.
that's one of the things that I'm now watching, right? So you had this lower high here. And here's your low. And so if we start coming down, you want to make sure that on Ether you hold this low, which is around the
Right.
1700, 1750 level. You're also going to have some other supports. So for instance, where currently Ether is hovering, you can see this pivot here and this pivot here. So you are holding this support. If that support breaks, this would be your next short-term target. So again, you
Right.
have a couple stepping stones, but right now, I think you look at it on the neutral to bullish side for Ether that is holding this support. What we want to see now is it move up and take out this previous high and then attack this double top. The only thing that concerns me with Ether is that this NFT craze, to me, it's very reminiscent of a bubble, right? So you have this kind
Hmm.
of craze and these NFTs getting sold for just so much money out there, and you wonder if that could be a kind of a signal that it's a bubble. But again, I do think there's long-standing traction with Ethereum, and it will be around for a long time to come.
Yeah, the scenario we're watching with the NFT side is I've noticed, and when you look at just tracking the number of wallets that are active in the space, it's a fairly small nascent group. And it seems to be like most of this transaction is occurring between a very small group of early adopters. So I'm interested in the sense of what the traffic and data that we're seeing off of OpenSea, the number of new people and new users coming into that ecosystem, which I think will be the question mark as to whether or not they stick around. It's kind of like in the early days of AOL. AOL, if you were, I don't know if you remember that, but it was crazy because in the very beginning, you could snap up all the keywords you wanted. They were all over the place. But man, by the time that you started to see critical mass appear, it was no longer the Wild West, and the market just kind of got sucked up. So I'm just kind of curious of
Yeah.
how NFTs might go in that direction.
Yeah, and
It's gonna be fun.
funny you mentioned AOL. As soon as you said that, I had that the logging on sound in my head just going
You've
off, and I
got
think all
mail.
of us, yeah, and that.
I love it. Hey, one last topic I want to hit on, and that is Robinhood is jumped in to, let me see if I can pull up that quick story here. Yeah, Robinhood jumped into developing a wallet. And as you know, Robinhood, big exchange, obviously for the millennials. And there's been some argument as to whether or not Robinhood would be able to hold the millennial investor crowd, especially in the crypto side, if they opened up a wallet. What are your thoughts on that? I'm just kind of curious. Do you think people will jump at the
Yeah.
point that a wallet opens up?
I do think that it will have some traction, and I'm sure they did their research ahead of time to make sure it will. But I think that again, Robinhood has such a base of hardcore supporters and users
Hmm.
that I'm sure there's the want out there for a wallet of that type. And I think I think it would be very interesting and probably have a lot of traction there. So I think that's a good move by Robinhood. I think they have to start to look to figure out how to expand to continue profitability. And I think again they see the future that cryptocurrency, whether it has its ups or downs over the next couple months, I think cryptocurrency has staying power and will
Yeah,
continue to evolve.
yeah, for sure. Hey, Gareth, it's always great having you here on the show. I love your insights. And the cool thing is we've been able to kind of see both sides of the plate here, at least in this last couple of days. It's going to be an interesting end of week to see how things start to pan out. But we'll definitely keep you on a tight rope and get you back in here
Yeah.
soon.
Yeah, I would love to be back on soon. I appreciate you guys having me.
All right. Thanks, Gareth. All right. So you guys, of course, want to drop some questions in. We're going to try to take some questions for you. And remember, when we're doing these kinds of, and by the way, if you guys have not, I want to kind of do a shout out to Gareth. His website is called In the Money Stocks. Let's just jump over there to them so we can kind of give him a little bit of love. But he's been on our show a couple of times, and I think he's a good analyst. He really looks at things a little differently, which is good. We want that kind of variety and also that different opinion here on the show. But anyway, if you guys are into stocks and you're looking at going that direction, Gareth might be able to help you out on some trading. Let's jump to a few questions and then we'll try to get moving in this direction. So let's go with Colorado Crypto Chick 111. Seems like September and October are red months, November and December being green, both in stocks. Do you foresee same with crypto? So we've seen some cycles, obviously, that kind of point to the fall. And if you've followed this channel for very long, you already know that our big number is still pointing toward the end of the year, and that is Bitcoin going to 100K. Reason being, and there continues to be wrenches that are thrown into the engine here. A lot of people have been looking at crypto, or at least at Bitcoin, flying way past 100K. I'm still on the conservative side of this. If it hits six figures, that would be my all-out top. And the likelihood of that being a end of year potential is real. And I think even though we've started to see the movement from China's movement. We've seen, I mean, look at the things that we've taken on this year, just in general. You know, you've got mining, you've got the issues of insider trading, you've got the legislation scenario that's running at us like just unbelievably rampant. All of that coming at us, and now you've got a $300 billion pretty much loan default coming from one of the biggest, you know, real estate companies in China. All of this seems to, sure, it dinks away at the armor, but eventually, you know, this is, and it seems as though what we're continuing to see is faith in what cryptocurrency is, maybe for the first time in its history, because so much of crypto has been in a scenario of speculative assets, and not everybody has been into it. I'm kind of curious, in the comments, when you guys see this video, whether it's after the live, how many of your friends now are in crypto? How many people are you talking to when you go out and you mention Bitcoin or Ethereum or any kind of blockchain project? What happens? Do people know about it? Likelihood, I'm going to bet they probably do. And that's the difference, I think, that really is going to help us move into the next one. All right, big supporter of the channel, Mr. Bob Hayes jumping in. How have you managed your portfolio during the dip? Did you sell, and did you change any of your positions? Okay, Bob, so what I did, and again, not financial advice, you guys should all be looking at your own portfolios your own way, but one of the things I did do is all of the trash coins that I was in, I exited them. Now, many of them I took a hit on. Some of them I was just like, hey, I've just got to take the hit, because here's the thing. I was actually leveraging the trash coins that I had, and I had maybe 6 coins in there, projects that have not moved. There's been some struggle. They did take a hit, and I moved that over into some of these projects that dipped, and I just unloaded into things like Solana. Obviously, I bought a ton of Solana when it was in the 130 range. I also bought some Ethereum when it's coming in there. I also looked at Cardano, grabbed some of that, and then sold it again right there in the little bump. And then now I'm looking for another re-entry, so I'm doing some swing trading on Cardano itself. The other thing that I'm still buying is Avalanche and, of course, Algorand. Those are the ones that I'm continuing to go into. There are some sleepers out there that I think have some potential on the Solana ecosystem, so you should get into the Solana ecosystem a little deeper and start to look at some of those, because there's some bargains in there that I think are potential. Also, the Kusama ecosystem within Polkadot. Another group, again, bought some more Polkadot and dollar costed average to go in there. So did not sell any Bitcoin, did not sell any Ethereum at all. So I'm not a panic seller. I'm a long haul trader, but I do swing trade and use Market Cipher now quite a bit on doing some of these short-term trades, meaning these 10 to 20-hour trades that has been pretty effective. So do you think, let's go to Howler, do you think it's time to get out and enjoy buying the dip tomorrow, just hodl, because the Fed meeting isn't going to change much? That's a good one, Howler. All right, real good question. I think the question here is, if I understand, he's talking about maybe exiting his position and looking for a dip to re-enter. So the likelihood here is that his positions were probably further in the cycle, meaning you're deeper into projects at higher rates. And the potential is maybe you take a short amount of capital, or excuse me, a short amount of profit, you exit and you jump back in. This is my concern with those kind of things. Unless you were in early on any of these altcoins, let's say Solana, and you're in Solana at under $50, okay? Let's say you're in Avalanche when we first started identifying Avalanche and you were in at $8 or $10. The opportunity there for you is, sure, in that kind of position, if I wanted to vacate some projects, I probably could and try to hold that and see if there's some opportunities to reposition and dollar cost average my Bitcoin holdings and my Ethereum holdings and do something like that. That's a good strategy, and it's one that I think, you know, I might rethink some of that on some of those, because some of those coins that I have are way back into their early life cycle, and they've done, you know, 10, 15, 20x. And we've seen just some ridiculous movement. Would I hold through this or drop while it's in a little bit of a stasis like what we're seeing with Avalanche? Maybe. That is a good question. Again, I think it depends on your portfolio and where you're going with that. Again, we are going to be doing more and more of this in terms of live stream. There's some big things that are happening very soon on Diamond Circle. The way it's going to work is pretty simple. you'll be able to join our Diamond Circle membership, and it's going to be free to you guys. So it's completely free. The key is you just got to jump over to our site. We'll have a link coming, not in this description, but coming very soon. It'll be ready to launch. You'll be able to get access to custom token analysis, project deep dives, things like that. We'll also do some podcasts over there, and also courses that are going to help you in educating yourself maybe on things like, let's say, yield farming, or you want to dive into DeFi and really go into that rabbit hole, or you want to get into early adoption and early identification of NFT gaming and NFTs. We're going to have all those courses, working with our analysts that are developing these courses right now as we speak. There's going to be a ton of those available over there. Again, those will be available to everyone, but the Diamond Circle, of course, they'll get discounts, things like that. But best of all, is that we're going to be airdropping money back to you guys. That's right. We're going to actually put together programs each month. We're going to be airdropping digital assets. I should say digital assets, because could be anything. Could be a token project, could be an NFT project, could be something in gaming, could be an IDO. We're going to start sharing back with our community. You guys helped us get to 100K, and that means we owe you one. So this is the idea. If you're a Diamond Circle member, that's how you're going to be able to get selected. We're probably going to do this, and we're still kind of working up the details of how we'll select, but we'll use a randomizer, and we're going to select winners of these airdrops in our YouTube comments. So probably on our live streams, we'll announce it right here to you. And the key, again, watch for the Diamond Circle link. You'll, of course, be able to see it because we'll have some new graphics and a lot of cool stuff in the description, so you'll be able to get to that for sure. The other thing that is going to be really helpful in Diamond Circle, and we're starting to build that platform out. It's a platform we've been using for quite some time on some other of our media companies. And if you guys don't know, TechPath is part of the Paul Barron Network, which is one of our verticals, media verticals. We also own another vertical called Foodable Network, and we run these two. TechPath, of course, is the show here on YouTube, and we cover a ton of podcast content with TechPath. But over on Foodable, we kind of do the same thing, but more podcast driven. But it's an entire ecosystem here. So this channel is supported by a variety of media products, research analysts, teams that help put all this together that you guys are seeing in the background. So it is a different kind of animal that's reporting to you, and you have now become part of the Diamond Circle and the family here, of course, at the Paul Barron Network. So that's the best way to do it. Drop comments below if you'd like us to do more analysis, if you have more people that you'd like to see on the show, whether it's a CEO or someone like that, in there, pick me, I like it. We're gonna do it. So more of you coming into the Diamond Circle. We can't wait to see you there. And of course, you want to reach me out. It's easy to find me. Just hit me up on Twitter @Paul Barron. We'll catch you next time right here on TechPath.